All right. What's going on, guys? Welcome back to the roll-up. Definitely some familiar faces, I think, everybody. So good to be back. Why don't we just go through some super quick intros? What you're working on and where you're calling in from, if you don't mind sharing.
Cool. I'm happy to kick things off. I'm Matt, co-founder, CEO of Caldera. Caldera is a leading rollups as a service platform. We power, at this point, over 50 rollups. Some of the ones you might have heard of, like Kinto, Manta, Sanko, etc. And I'm calling in from San Francisco. So it's a little early here. So got my Red Bull, but excited to be here.
Hey guys, I'm Sam Kazemian. I'm the founder of Frax and recently Fraxel, which is a modular rollup. It has a fractal scaling roadmap, L3s, and unique block space incentives.
Hello, I'm Felipe. I'm calling in from Brazil, more specifically Rio de Janeiro. I'm with Cartesi. We are a modular execution environment, and we have a Linux runtime. So the idea is like you can do app chains, L2s, L3s, making use of that Linux runtime.
Hey, my name's Jake. I'm the founder CEO of Mitosis. I'm calling here from Korea. So Mitosis is an ecosystem on liquidity layer 1 blockchain that facilitates newly created modular blockchains to capture TVL through the Mitosis governance process. Happy to be joining the call.
Awesome. I'm Andy, also calling in from at least within 5 miles of Felipe, although we haven't had a beer yet in Rio, which is sad. Got to get that set up. And yeah, excited to talk about points. Rob, welcome in as well.
Thanks, man. I'm calling in from Florida. And so I feel like everyone's pretty tropical nowadays, which is pretty cool. And yeah, I like to learn about incentive mechanisms at the rollup. Lots of friendly faces here, so stoked to get into it.
Cool. Let's dive in. Let's start with I think one of the bigger trends of this kind of modular space is this shift from applications to kind of wanting to own block space and to become their own chain. I think that there's a different way to build communities when you're an application on a rollup or on a general purpose chain versus like having to own your own block space and almost like design that entire mechanism from the ground up. No one better, I don't think, than Sam to start here, having built Frax into now Fraxel. Of course, kind of launching your own chain now as well, an ecosystem of chains. I think like the first question here, and then kind of opening the floor after is what is the difference in incentive structures from dApps to kind of app chains and rollups and chains?
Yeah, definitely. That's a good question, because when you're building a chain ecosystem, there's actually two things, at least in my opinion, you want to do. One is you want to make the incentive structure as general as possible, if it's possible to actually capture the value that all developers and applications have, because anyone can build anything on the chain, right? You don't want it to be just this manual system of you have to go and like basically look at everyone doing everything, and then just have only the system of grant committees, people doing these things by hand and manually. You want to basically say, hey, if your application has some objective criteria, right? Whether it's TVL or whether it's, in our case, it's how much gas is spent on it and how popular the smart contracts are, right? With Fraxel's block space incentives, then you want to basically be able to offer that to everyone in a transparent manner, right? So that's one of the important things. And then the second thing, and I think this kind of probably resonates with everyone, especially Matt at Caldera, is like you want to encourage people to actually launch their own chain, as counterintuitive as that sounds, if they want to actually start off by building in the ecosystem, whether it's like Fraxel, right? Whether it's Optimism, Arbitrum, Cartesi, whatever it might be, right? And if they want to actually eventually have their own app chain, and the goal should be to make it possible for them to be the most successful L3 in your network, for example. This is why we call it fractal scaling, and that's where Fractal gets its name, is that we actually want everyone to build anywhere on the fractal, aka like build an app and get fractal points, get incentives, or transition your app to an L3 or any kind of app chain that's positive sum with the actual Fractal network. That's all good, and it's all part of the same ecosystem. So yeah.
Yeah, I feel like one thing that can seem to be an advantage of being on a shared environment, or is that you can survive without having a clear economic structure for yourself, right? So you can launch on Ethereum and you can survive just because people want to use Ethereum for Uniswap. So your chain doesn't have to justify its own existence. That sounds good, but in reality, you actually want applications that can actually justify their own existence. And the advantage of moving to your own chain is that you can tweak and design the incentives to make sense to the use case, for the use case that you're working with, right? So if you have like an exchange, then you can design incentives to have people market make or like provide liquidity and so on. So this flexibility, I think it's quite interesting, because incentives are very hard to design and they're very use case specific too. So yeah.
Yeah, I agree with all of the above. And I think, one of the important things to recognize as well, as Sam was kind of alluding to, is like, because these are sort of like nested chains, right? We have L2s, but we're going to have L3s and maybe even potentially L4s down the road, all using all these different modular components. The incentives kind of go both ways. Like if you're launching your chain, you're probably getting incentives from some folks, whether that's the stack providers, the DA layer, potentially the settlement layer, maybe a shared sequencing layer pretty soon. Like so you're able to kind of use those to like start building your community, solving that cold start problem, like figuring out a way to justify your existence, as Felipe said. And then you're basically taking all those, aggregating them into your own network with some decentralization, with its own differentiated block space. And then you have your own incentives to try to like bring people onto that. So like the really cool thing is like, it's sort of like, most of the teams we work with, they're getting incentives from somewhere, and then they're also like giving them out. And like, that's kind of like where some of the differentiation is coming from.
Cool. Yeah, lots of good points there. And I think that kind of even guides us to like the idea of, okay, so we are in a monolithic system. You're kind of building a lot of apps on a single chain, and the ideas are different. And then going into a modular, you kind of expand into more chains, which now we've kind of established the key differences there. And Felipe, prior, you raised a good point about kind of the differences there. So would love to have you elaborate a bit more on kind of what you were thinking about how incentives are different in the monolithic systems versus modular, based on that, on the first point there, and kind of dive into your thoughts there.
Yeah, sure. So on monolithic chains, the incentives are also unified in a sense, right? So you have the validators validating Ethereum, for instance, and you can like plug stuff in, so they validate a bunch of stuff, and it's the same incentive, right? The block rewards and so on. There are problems with that. Notably, Vitalik wrote a post recently. Actually, he wrote it a while back, but he wrote an addendum recently about multi-dimensional gas, which is explaining the difference in pricing for data and computation, for instance. And they have different incentives and they have different costs and so on. And that kind of points to the problem and the more efficient aspect of the modular blockchains, which is each layer needs its own incentive. So the incentive for people to hold data is different from the incentive for people to execute computation and to prove computation, which is different from the incentive for people to order transactions and incentive for people to let go of MAV and so on. So in a sense, the incentive structures on modular access systems are trickier because they're bundled up, but they are also more efficient because you can price stuff specifically. Like you can design your incentive for the data layer, which is different than the incentive that you're designing for the execution layer and so on. So I think it's a huge challenge, but it's also a way to make the whole thing more efficient.
Cool. Yeah, Rob.
Is there like, have any of you guys looked into MEV? Because Felipe, you brought that up, and it's something that like I realized about Ethereum base layer is that we have like these sandwich attackers and the validators that end up extracting some of that MEV, or even different levels like the block builders. Even that stack is getting a little bit more modularized. I'm curious, how does that work in this app chain ecosystem? Have any of you guys looked into that?
Yeah, a little bit, not too much. MEV is a super complex topic, right? But on app chains, I guess you gain a lot of MEV by being able to follow many chains at once. So you can take opportunities on different app chains. So if you have atomic execution, for instance, then you can steal MEV from multiple labs at the same time. I don't think it changes a lot from modular to monolithic, to be honest. I think you do have more agents selling information in a sense, but the concept of MEV still stands. Unfortunately, that's not something that I think we're going to make great progress on modular, at least compared to monolithic. I think it's going to be very similar.
Yeah, that makes sense. But to your point, we do make it more efficient by unbundling and then pricing things differently and more accurately to what value they provide.
Yeah, exactly. Just to be clear, I'm not a huge researcher of MEV, so I'm just like sharing my intuitions. Maybe that's something that we should debate more often in the modular space as well.
Cool. All right. Well, now that we've kind of set the foundation for how we're thinking about this, let's kind of dive into some of the more practical terms here. We've got a bunch of Mitosis fans in the house, so we're gonna pass this over to Jake and talk a little bit about some of the points meta work that is happening. I think basically up till eigenlayers drop. There we go, Gmito and Jamer. We also have a community question for Matt about his profile picture that's coming soon. But Jake, passing over to you, I think, from my opinion, eigenlayer was kind of like the pico top of points, and since the sentiment is has kind of diminished. I guess, what's your thoughts on points, and what's your mental model going forward for incentivizing usage of different projects, pre-token, pre-launch?
Yeah, I think we could start with on the negative side of points first, and then elaborate more on the bright side of points. On the negative side, I think points have a tendency of procrastination of economic rewards, and it leads to the misalignment of incentive structure in terms of users and protocols. But I'm not saying that points are bad, but there's a clear reason why points are being meta. But I want to emphasize there's like clear imbalance between individual liquidity providers. They want more clarity in terms of what they're getting, and from protocols, it's harder for them to kind of promising fixed amount of token incentives. It may be like due to the ambiguity of how much liquidity they could capture, or based on the legal issues. But based on several, because of the several reasons, points has been a very useful tool for protocols and projects, including us, that we don't have to promise certain amount of tokens incentives from the start, but people to capture, provide liquidity into the protocol, and then giving out points. But I think there's like the design of the space have created the points meta. I don't think it's anyone's fault, and I just think that the more the recent trends are showing is that individual LPs will get squeezed, and there will be more complaining and frustrations from individual liquidity providers. So I think there needs to be a somewhat movement of how to fix this imbalance and this ambiguity of incentive structure. So yeah.
Yeah, I just wanted to jump in there, actually. First, if you think of what points are or what they're supposed to be, right? The way that I just think about them is like they're forming a distribution, right? Like things that are important and actually form a market around is a distribution of something, right? Like a group, a coordination mechanism to create a group of people that essentially creates a market around it, right? And one of the main reasons, for example, with like Fraxel points, we wanted to make sure that it was on chain. So like you can actually go and see every single smart contract in users and EOA balances. Like we wanted to actually make explicit what that distribution is, no matter when it's tokenized or whatever, because that actually has value, right? And I think we might be one of the few, I mean, you could correct me if I'm wrong, but we might be the only ones right now to actually explicitly have a ERC20 contract that says like Fraxel points. It's not transferable. There's no transfer function, but everyone and every smart contract has balances, and then one day the whole thing might have a transfer function, right? But the idea with it, and I'll actually kind of say this as an aside, like Fraxel is having like a huge hackathon, and so like there's people building, there's anyone that's you think they can build L3s or dApps and stuff, and the winners, in addition to cash prize, they'll get Fraxel points as part of the Fraxel point distribution. And people will see that on chain. They'll see what it was for. They'll see why it was allocated. And I think a lot of the times right now, points are like kind of a front end thing, right? Like when you earn eigen points, or when you earn blast, or like any of these points that are the big kind of meta right now. I think you just see them, right? And like, I mean, I'm not a big blast or other LRT farmer or something, so anyone can correct me if I'm wrong, but I think you just see them, and then it just stops there until like there's like a token announcement or something like that. And I think that really kind of gets it doesn't do justice to the growing utility of the distribution, because it's the distribution that actually gets the market value when things can actually can trade, right? Can actually move. So that's kind of what we're doing with Fraxel points. Like the more holders there are, and the more you could actually see them on the chain. Yes, there's no transfer function yet. The more valuable it actually is, because they have the history of all participants that in some way, contributed, earned Fraxel points through the block space incentives. They won a big hackathon. They did X, Y, and Z, and they combined to actually create a larger and larger group of holders. Like I think there's probably like thousands and thousands of holders for Fraxel points. The cool thing is I can just pull it up right now and actually.
So Sam, it's like it's a transparency thing. It's like it's a transparency of how much you have verifiable on chain. But even still in the Fraxel situation, and you can explain how many are there and things. Even still, though, the users would be unknowing how much like one Fraxel point is equivalent to like token, but at least they have this point on chain that's like not just like a little like a front end thing. It's
exactly.
Kind of what
Exactly. And so like right now there's 8,082 Fraxel points holders. You can literally look it up. And as you said, yeah, they don't have everything, right? There's not like necessarily the exact supply, or like when the transfer function will like be turned on and things like that. But what there is you can consistently just have more and more functionality to it. You can also airdrop to this functionality, right? Like this distribution, which is powerful.
Is there a way, Sam and Jake, real quick, is there a way that there could be a points market on chain for Fraxel points that doesn't have to go through like whales or a different market? Like by putting the points on chain, does that make them more fungible than what they previously would be?
Definitely, it gives more fungibility in terms of if you make it into a tokenized version. But currently, as Sam mentioned earlier, that Fraxel points are not transferable yet. But I think in the later future, when that's transferable, and I'm really sure that there will be a market for that as well. And not just about, I really think that's what Sam and Frax team is doing is creating a very great example for how teams should carry on their point system. But in the reality, what we are seeing is that many teams can't prepare like transparency from day one. Like they hope they could provide like more clarity in terms of incentive structure, and if you create something like the on-chain points, that's a very cool function, but it's not being widely adopted because everything should be executed fast in terms of their newly created teams. So, and the more the teams and the projects are coming out, it gets harder for them to capture like liquidity. And I think this is like a really big problem when there's like many different modular blockchains spawning out, and on top of these modular blockchains, there are several different DeFi applications on top of that, and they are fighting to capture liquidity. And I think it will get even more harder to capture the liquidity, and there's like clear imbalance between it. And what Mitosis is trying to solve is that as an individual liquidity provider, don't just provide liquidity into a very ambiguous incentive structure. Just provide with Mitosis. Mitosis provides to a newly created L2s or modular blockchains and get a deal like a B2B style. And then we sweeten up the deal when there's more and more liquidity inside Mitosis. So I think what we're doing is a pretty exciting experiment where we try to empower more individual LPs that if we move together, we can act as a whale. And when we act as a whale, then it means that we could sweeten the deal and we have a certain amount more bargaining power in terms of getting more exclusive deals. So we can exclusively work with newly created L2s and provide liquidity in like 6 months. And during these 6 months, we can also provide like liquidity to the apps, like DeFi apps in L2, and we can closely collaborate. And during the time, we can boost their TVL and boost also the users. And I think in that way, it gives more power for individual LPs rather than just like providing liquidity by themselves. And yeah.
Gotcha. You've got the yep. Go ahead, Felipe. Just you've got quite the fan here in Halo CO.
I was just gonna say that I think it's really cool to have points on chain. I think that the transparency is a big deal of the current point systems. And I think points like there's a lot of detractors to points. A lot of people say that points are unfair or unsustainable. But I don't think points have their places, especially when you're trying to devise an economic system that needs scale. So you can use points to bootstrap that scale and that community. And it's also a great way to monetize or acknowledge participation, right? So when a protocol is starting up, there are a bunch of different ways to help it, right? Not only code, not only provide liquidity, but as Sam was saying, like a hackathon, for instance, participating in a hackathon is a way to help a protocol to reach the scale that it needs to survive or to make economic sense, right? And a points are a way to transform that into like an incentive and then kickstart a community. So I do think people are a little bit unjust with points, but I might change my mind if the points meta starts to grow a little too uncontrolled as it is giving signs, right, of doing. But yeah.
Cool. All right, good segment there. That was kind of the key takeaways. I think is like these like on-chain points, the transparency going forward of like at least being like as honest and as upfront with users as possible, and kind of like not farming your community. You know, like I think that's kind of been like a bad vibe going on, and so wanting to put that out there. Kind of shifting gears, we have at least 3 projects here with unconfirmed plans for, tokens or different kind of incentives down the line. We don't need to get too too rigid in like confirmations or anything like this. But just a broader question, like I'm curious what you guys think about this idea of like using a airdrop as a marketing strategy with specific NFT communities, like that kind of broader meta, as well as just like any innovative strategies that you've seen from other projects that you've liked, that you've worked with, or that have happened that you think are kind of a good way to go about it. And Matt, we'll pick on you. I know it's like 8 a.m. over there, but you've been a little quiet, and then we can go around.
Sure. Yeah. I mean, as you kind of alluded to, like no confirmation about any token plans from our end. But just, saying this is like an observer in the space, like I think the NFT community, like airdrop meta, like is very, very interesting. I mean, a lot of NFT holders, especially of like some of the OG collections, like they're the types of people who like, basically it's like proof of diamond handedness, right? Like they've, if you're a punk holder, or an ape holder, or even some of the newer, pudgies, etc., like sloths potentially, like, first of all, you're willing to like buy into a community. You're it's proof that you're willing to either get in really, really early on a cool project, or you're, kind of willing to put your money where your mouth is and like buy into something really cool and, show strong alignment with the community. And also that you're willing to hold that, kind of like through the bull, through the bear. And so I think it's like a really, really interesting strategy. When we talk to other founders, some of whom are our users, about like their airdrop strategies, that's kind of like the, like that's sort of like the gold standard of the type of user you want to airdrop to, someone who's not going to dump, someone who you hope will stay aligned. So I think it's like a very, very interesting, proxy for that. And candidly, with hindsight, I'm surprised that the space didn't coalesce around something like that until recently, because I think with hindsight, it feels quite obvious. I think in general, like around incentive alignment, what we're seeing with a lot of there's sort of like, I think like a couple types of projects that are launching tokens right now. There are like the ones that have a strict kind of like B2 to C ish relationship. So like, I think these are like the chains themselves. I just saw like, I think Tyco announced a token, but like, ZK Sync, it sounds like is going to do one as well. No inside info there, but just based on public comps. Like those projects, and of course, like things like even Eigenlayer are like a little different from like projects like I think some of ours, right? Like on this call, where like I think a lot of the teams here, we have like a B to dev relationship, or like B to B to B to C. And so it's very interesting for like a project like us, as we think through like what designs might make sense, like, even in not just like explicit token designs, but also things like our recent Quest campaign. Like a lot of it is focused around like customer success, like highlighting our developers, our, the folks in our community, et cetera. And I think like, that's going to continue to be the meta for like a lot of these more modular systems. Like for a project like, Celestia, for example, again, no inside info, but like they're very interesting, where like the actual consumer of their block space is entirely like startups, but they've done a really, really good job at positioning Celestia as like this community you tap into with all this, great usage and retail attention and users, like where like kind of aligning yourself with that community will probably lead to more usage over time. And I think like that's kind of like the thing that a lot of the folks in this sort of like modular middleware infrastructure space are kind of working towards.
Yeah, no, I'll jump in there and say first about your like question about tokenization and stuff. Obviously, I'm not going to confirm anything, but I just want to say the fractal points contract is like 9/10 of the way there to an ERC20 contract. It's like literally one transfer function away. So like you can kind of gauge what that might mean. But in terms of the other things, so I think Matt said it pretty well. The cool thing is like, it's actually kind of like Matt's job as a roll-up as a service provider to proliferate a bunch of modular stack chains and networks and communities, and then it's us on this call the other ecosystems to actually build out our ecosystem of, roll up, and then, hopefully likely L3s and everything. And so there's different types of relationships there, right? For like the mainnet network, right? Especially with something like Fractal mainnet, you want to be the most dev friendly, dev incentives, and positive sum in every way. And then you also want to actually remember a lot of the community there eventually can turn into a not just app level player, but then they can be the B2B of your chain by launching an L3 or an app chain, right? And as things become more modular, that's why we have the whole fractal vision, right? Because you can build kind of anywhere on the fractal, and like you want to build the relationship between developers, app level, all the DeFi things and everything there, but also you want to build a relationship where your chain is known as one of the best positive sum places to connect to in terms of an L3 settlement and things like that. So that's how we think about it.
Jake, I think this is a pressing question for you as well, seeing as Rob and I have certainly tapped into the expedition and claimed our Mito points for penguins and sloths and bad kids.
Yeah. So start with like our community development. We opened up our Twitter profile less than 3 months. Starting from zero, now we have like 130K followers in Twitter, and we have like nearly zero marketing budget in terms of like paid promotions or something like that. And I think the clear reason why this is happening and why we had a huge success is with collaboration with NFT projects, and thanks to like they were very friendly in terms of collaborating with us. We even gave like badges in during the expedition campaigns, and that began the kick of like very loyal users came into our expedition campaign, and then farm the testnet tokens, and then after testnet they're farming mainnet tokens as well. So we opened like 2 epochs. Like one epoch was like 3 million, second epoch was like 11 million. So in combined, we have like 14 million right now, and we're opening up our third epoch tomorrow, by the way, and that's like 40 million cap. And both epoch has been closed less than like 1 to 2 hours, and the huge success has been driven by, I think, the collaboration with NFT projects. And because of these loyal users have recognized what we're doing, like we haven't spent any budget in terms of marketing, and it has been always like a very natural and organic growth from our side. So is there a airdrop? We can't confirm on that detail, but definitely I'm not going to betray on these NFT projects that have really helped our growth in our initial stage. We were pretty frustrated in terms of like how to grow the community and something like that. But when we like talk to more loyal users in the NFT space, we kind of like know how the space works, and we don't have any incentives for us to make the frustration for the ones who have helped us in the initial stage. So that's the thing that I can kind of confirm. And the one thing that we're doing also is something called a Morse NFT project that is an internal Mitosis NFT campaign. And I think the good thing about Morse is that we're not here to sell any NFTs. I've seen like new projects that are doing TGE that they come up with the NFT project, they're selling at like some amount of ETH, and then after that, people in the community are angry and furious about so I farming the wrong thing? Am I just like, should I just like buy NFT? And I think the misalignment happens when you sell the NFTs. And the reason why we're building NFTs is that I think what we're doing is a very like cool experiment. And on top of the cool experiment, we are doing the concept of something called DN404, which we can trade in a more like ERC20 fashion, so that we can kind of like remove the soft hands in the initial stage, where people who like just came here to farm the DN404 ERC20 tokens, they're just gonna leave in the like early stage, and someone who are diamond hands will like still stay and gain more tokens, so that they can convert that into an NFT. And so that is how we kind of like recognize who's the like actual user and the actual community member in Mitosis.
Gotcha. Cool. Yeah, that 404 standard was pretty interesting. They had that big run up earlier this year. Excited to see kind of how you guys implement them. This next one's kind of for the three guys who kind of have these chain ecosystems, being kind of like roll up frameworks or kind of like RAS realms. And Rob and I had this idea where like there should be some sort of incentive mechanism somehow where like the token holders or the community of certain RAS providers or roll up frameworks should be exposed to the upside of the chains that are launched within that framework or within that RAS, where it's almost like my argument for like the value of like a Caldera or a Cartesi or a Frax is like, if there are apps that go and build using your tech and they end up being very successful, that all kind of trickles back down to being like, yo, I started on Caldera, like I was built with Cartesi, and so I'm curious how you guys are thinking about ways to like align your community, whether it be token holders or some sort of community that you have, with also the upside of the chains and applications building within your ecosystem. And if anybody wants to take a stab first, we can go around.
Yeah, I can start. So I think it's a good point in terms of there's a lot of roll up like framework I guess programs, right? There's like the op super chain, right? The idea is like, and Fraxtal is part of the super chain in terms of Fraxtal mainnet. There's Arbitrum, Orbit, there's all these things, right? And like you're saying, the idea is like, if you belong to any of these, or if you were built with a specific role of a service provider, if you kind of fit into any of these places, you are kind of in this collective, right? And so with Fraxtal, we also have this idea of like, if you build anywhere that's associated with Frax on the DeFi layer on Fraxtal mainnet, or later an app chain or L3, you will earn Fraxtal points and be part of that distribution. In fact, it's almost the other direction. You'll earn points rather than the community will kind of extract any fee or value. And there's actually tail emissions too, which means same way as like Bitcoin has these emissions for over 100 years, they just get lower and lower, right? Fraxtal points do that as well, right? They don't. It's not just an airdrop program, as we started off saying. We have this algorithm, we have the system to continually make this distribution of people building on Fraxtal more and more valuable by aligning all of their incentives into like years and years. And as the Fraxtal points distribution gets more valuable, so does earning it, right? Even if the amount of points gets less. So yeah.
So that's like users and devs building on Fraxtal will, every action that they take, there's always some sort of retroactive reward kind of baked in.
Yeah, exactly.
Yeah, at Cartesi, we're exploring some stuff related to that. So on app chains, you have a problem of attention economics, right? So you have like thousands and millions of app chains, and the users don't know which one to use, and the validators don't know which one to validate. So we actually have a proposal on our Vision forum currently, which is quite interesting. It's a curator system in which you can stake CTSI behind an application, which is a signal that that application is going to be popular, and then you can get trickle down value from the application being popular. So we're still debating it. It's early stages, but it's quite similar to the graph token economic system, which is super nice. They do these curator things for reader nodes and schemas. It's very nice. But the whole idea is aligned with what you said, which is kind of splitting incentives, right, and distributing incentives across the ecosystem to reward popular applications and reward users and reward the protocol from the popular applications also rewarding the protocol that helped them become popular. So I think there are a lot of different angles that you can take there. We are definitely exploring some.
I actually super quick wanted to jump in and say, like, so the Vitalik published a blog post yesterday that I think is super relevant to this question and topic, which was like, he was like, if you think of sharding, right, on the L1 layer, which is just a bunch of computation and then ZK aggregation and into like the entire state, kind of is the same thing as the roll-up L2 centric roadmap view, right? He was actually started off the blog post, and I highly recommend people read it, which is like, if Ethereum had the sharding roadmap instead of the L2 roadmap, like front and center, aren't they just the same thing? Because like they all split computation, right? And then they all like aggregated back to like some state, right? And he was going through like, what is actually the difference, right? Is it sharding? Is it just because like that mechanism is enshrined in the protocol, and versus like L2s or smart contracts where like computation happens and then everything's pushed onto that L2 contract. And the thing he said is actually more about innovation and incentive design, right? Because in a sharding centric roadmap, there's just one way to do shards, right? There's basically like one thing, and then if you wanted to innovate on shards, it would basically be up to the Ethereum Foundation, right? Like if you wanted to have like different shard execution environments or something else, or different types of ZK proofs that prove the computation stuff, everything would have to be done basically by like Vitalik and the EF, right? It's kind of like the centrally planned, so to speak, thing. And that would be the opposite of the L2 roadmap in an economic structure, this sort of way, right? Versus with L2s, everyone can experiment with different execution environments, different zero knowledge proofs and everything. So it's almost like it is a sharded like roadmap, but you kind of delegate it out to innovation, and then people can tokenize their shard, so to speak, right? And I thought it was a really good way to think about it, because it actually aligns kind of with our fractal kind of vision and why Fraxtal is named like that, because we're going to build Fraxtal mainnet and make it really, really vibrant and everything, and then encourage everyone else to build on top or on the side or whatever on the fractal L3s, or who knows, L4 social dApps and stuff in 3, 4, 5 years from now, right? And we don't want to actually do too much. We want to make sure everyone's incentivized to do that kind of innovative layer, release their own app chain token, release their own app token on Fraxtal mainnet, wherever they happen to be. And when I read it, I just thought that's actually exactly how we think about it and why we did the fractal branding. And it's cool that Vitalik is kind of talking about it the same way.
Cool. That was there's Jake. Yeah, Matt, just wanted to let you jump in there as well. I'm quite curious as to like how you see Caldera community being a reciprocal, like a benefit of all the success of the chain.
Yeah. So candidly, this is something we're still thinking about. I think generally what we've seen in the Web3 space is that like heavy-handed approaches tend to work worse than like kind of more light touch approaches, right? Like there is potentially a world in which Ethereum insisted, right, like every L2 that like launches on Ethereum, like it's our recommendation is like ETH core devs for them to give, let's say, tokens to ETH stakers, for example, right? Or ETH validators. I think that like trying to, enshrine those things like in protocol or at the business level has some pretty significant trade-offs. When you're building a network, the most important thing is to grow the network. And so the more friction you add to doing that, like the kind of harder it gets to actually get that network to critical mass. That being said, from that perspective, our view is basically to give more than we get as a community, right? So if we build like a really amazing community with a lot of highly engaged users, then we expect that things will fall into place. I think like Celestia, and some of the other folks have done this fairly well, where it's like, you can just by getting that community's buy-in, you have an initial set of users or some devs, some validators, et cetera. And like, we want to position our community in the same way. Like our goal is to always help our chains succeed. And so for us, growing our own community is just like another way to do that. And we hope, as we demonstrate value to a lot of like the chains and the other communities that we work with, then like, hopefully like just, that'll be reciprocated and there'll be, generally good vibes all around. But yeah, candidly, like, I know this is something a lot of people have talked about when it comes to RAS and like some of these other platforms like Dimension, Inisha, et cetera. I'll be very interested in seeing like how the incentive design actually ends up, manifesting in the long run. But like my guess generally is that, if you want to build a developer platform, the kind of name of the game is to reduce friction, and like any sort of strict token or distribution requirements, I think is likely to harm that mission. So that's just like my general personal take. But yeah, very, very interested in seeing like what ends up happening.
Yeah.
And real quick, Matt, they were wondering if you were going to change your profile picture to a sloth.
Yeah. So I said I was going to do it. Whenever I say I'm going to do something, I mean what I say, and it's going to happen. I guess like peek behind the curtain is like, I have like a surprisingly low amount of liquidity. Like I was going to go out to buy a bike the other day, and I realized I didn't have enough money in my bank account. When the money like comes into my bank account, I'm mostly deploying it into angel investments, et cetera. So I need to figure out some way to get liquidity. Obviously I could, I didn't want to sell any Celestia to buy a sloth. That felt like, a wrong thing to do, but it's going to happen. Now that I saw it and in the community questions, I think that's the impetus to do it. I'll make a commitment to the community. It'll happen like by this time next week. My PFP will be a sloth that I own. But yeah, I have been. Sure.
And then real quick as well for Sam and Jake, we've got a lad that would like to see Frax ETH into Mitosis. So maybe there's some room to spread Frax ETH even further into the ether.
Heck yeah. Let's talk right after. I'd love to chat and make that happen.
Yeah, me too. Sure.
Cool. Rob, over to you, sir.
I don't know if I can top a product integration in real time, but I'll try. I mean, no, I was going to mention like on this idea of kind of like the roll up framework and RAS, like underlying layer tokenization, and then what comes up like on top. Because looking at OP and the Optimism token, and then the super chain as a pretty good like example for all of that. Like Optimism is a governance token, but OP isn't the gas token, and it's not used to pay for transactions on Optimism mainnet or any of the Optimism super chain. And so to me, it's like, and you also don't even see like the chains on the super chain using Optimism as their governance token. So the whole like value proposition around governance tokens was like, well, if this ecosystem is important to maintain, then the stakeholders in that ecosystem are gonna value the governance token so that they can have control over how it's governed. But you just don't see that playing out. And so I'm generally curious as far as like, Felipe, Sam, Matt, like how you guys, and I think Matt hit on a good point about like, you don't want to stunt the growth of the ecosystem by requiring certain token distributions. But it would be cool to see some more like hands-on incentivization and like togetherness of the chains in an ecosystem, and then the like more core chain or asset layer in Frax's case of like how that is incorporated into the app chains that surround it. More of an observation than like anything, but yeah, Sam, I saw you on mute, so curious.
Yeah, so like definitely, I definitely have opinions on this. I think the first thing is the control for value was probably pretty wrong, because people don't pay for votes. In fact, you have to kind of pay people to like get active in governance. It's even in TradFi, right? No one votes with their stock. In fact, there's like things where like companies couldn't get board things to pass because they're just like, if they have too much retail stockholders, if you've seen those like Bloomberg articles, like they can't pass like 20% of the vote, because like everyone on Robinhood that holds the stock is not going to like randomly vote and log in unless there's like some kind of even incentive. So I think the main thing, which has been my view and why Frax financed the layer that actually is in the DeFi layer, could actually like focuses on money, stable coins and LSDs and things like that, is that the main use of a lot of these tokens is either staking as economic security, that currently like EigenLayers made that really like explicit with restaking, or monetary premium, which is the thing, basically the fact that these tokens actually are the most liquid in some environment, whether it's their chain or an L2. And then having these tokens most likely translates to utility in being able to earn other tokens, right? Because other projects have the LP pairs against this token, or like you can actually borrow against this token if someone launches a lending protocol. It's like the first thing they integrate. That's called monetary premium, like the actual utility that this thing provides you by being some kind of unit of account in an extremely liquid environment, and usually one of the most liquid things. So I think the best way to say that how to make governance tokens valuable, which is either like FXS and then Frax Finance, Fractal, the tokens here or something, is like you want them to be first class citizens of like an environment where they are the one of, if not maybe probably the most valuable and liquid in an environment, in an economy, so to speak. And then the fact is there needs to be social coordination on this token is the thing that most projects will incentivize, right? If it's a gas token, you kind of have to, right? Actually, my money-centric view of the world is not like, oh, like Ethereum is valuable because you have to pay gas and you have to like pay DA eventually in a multi like L2 world. If you think about it, like most of Ethereum's market cap comes from its monetary premium. And there's like 99.99% of BTC's, a couple trillion market cap now comes from only monetary premium. Bitcoin doesn't even get fees, right? So Ethereum, even if you think about, for example, $20 billion of cash flows from like DA payments in a 10,000 roll-up world, right? That Calderas and conduits and all these things have launched. Let's say Ethereum makes 20 billion in like ETH fees, EIP 1559. If you think about it, if you give it even like a 40, like 40 PNE, right? Like, which is like pretty good, right? That's like barely like $500 billion, right? Like that's basically the current market cap, right? Imagine a world where Ethereum makes 20 billion revenue in DA, which would require like insane amounts of L2. It doesn't even get to $1 trillion market based on like cash flow analysis. So cash flow and fundamental analysis is not how governance tokens get valued, right? Or like any asset. And so encourage everyone to make their asset money, right? It's called cryptocurrency for a reason.
I think there's probably another conversation I have about like monetary premium. Because it makes a ton of sense. Like when you start to really dig into the valuations of things, that's not what is creating the value. And so it's this other monetary premium thing that's really getting to the meat. Yeah, Felipe?
I just have a very quick point. I mean, this could be a very long conversation, But something that you mentioned that is quite interesting is about OP tokens specifically. So like OP token is a governance token and it's not used for gas, which is, I guess it's by design, because the incentives that you have are very different, right? Like a governance token you're supposed to hold if you care about the ecosystem, and a gas token you're supposed to spend if you want to use the ecosystem. So if you have both tokens in one, then you're actually spending, like the people that are actually using the applications are diminishing their governance power. So it's like very tricky to design incentive. But I guess this is like an hour-long conversation.
Yeah, I want to be mindful of your guys' time, and we have to bounce as well. Thank you so much for jumping on. Looks like we have a very important question here from the community. Really type of extremely influential and really just top of the line here. Please don't make this. Thanks, buddy. All right, guys. We'll speak to you guys soon. And again, thank you so much for joining.
Thanks,
so
guys.
much, guys.
Cheers, guys.